Hello everybody, good morning, good afternoon, and good evening depending on where you are in this amazing world. My name is Donovan Jolly and welcome everybody once again for another amazing video of DIY investing. As we open the markets on this Monday, we are seeing a lot of blood in the streets. Markets are pulling back, the stock market has pulled back, and it's caused Bitcoin to pull back with it. With that being said, Bitcoin is actually holding up surprisingly well in the wake of the stock market sell-off, which is exactly why I wanted to get back into some charts. We talked a little bit about this last week on how we could expect to see a pullback in the markets. Now that we're getting it, we're going to talk about our plan on how we're going to execute moving forward so that we can stay the most profitable, especially as we're getting closer towards the end of this year. If you're new and just find this channel, always remember to do me a favor by leaving a like, comment, and subscribing to this channel for more updates. Always remember to click that notification bell so you don't miss out on any of these amazing videos like the one provided for you here. If you are a new guy just getting into these markets and you want some extra educational content to study off of, make sure you guys go ahead and download my free ebook and Beginner's Guide to Crypto. I know this thing's going to help you guys out tremendously. That's why I've made it free to download. Check it out. With that being said, let's jump right into this amazing video today. Alrighty guys, so taking a look at Bitcoin on the daily time frame today, as you guys notice, we have had some declination after our recent update that I gave you guys. What I was talking about in my last update was really just the fact that we hadn't ever broken out of our RSI. We had 3 different attempts at breaking out. All 3 of these were stuffed. We could see that the price wasn't breaking out either. And I said how in the short term this trend looks exhausted and we need a pullback. And that's exactly what we've seen so far. We've got some resolution from that resistance and we've pulled back and we've had a nice little dip in here. Now, the thing I want you guys to remember here is we have had this pullback, but this pullback actually happened before the stock market pulled back in a big way. So this pullback was happening back on the 19th of August. Whereas, even though the markets are opening up red today, so with the stock market, think about how big of a move that we've just had in the stock market. This is a pretty decent sized pullback that we've had, and Bitcoin's actually down less than the stock market is. And so overall, that is an encouraging sign for Bitcoin. It's an encouraging sign for crypto, and it's an encouraging sign that maybe this is just the potential for the true bottom. And this is something we've talked about. We've talked about the pi cycle bottom indicator that we've been watching in here. We got our pi cycle low indication once we retested the 200-week moving average. And so now that we're pretty much just sitting at this range, I've kind of talked about why I expect a lot of chop throughout the rest of this year. And it's hard to say whether we're going to actually hold support and this will be our lowest low, or whether we have to end up going through some more chop. You know, anything's possible at this point, and I want you guys to realize that when we're getting closer towards the end of the year, even though I'm not expecting a massive move below our support, we could still make a lower low and it could just be a very choppy, volatile time where we just barely peak below our support lows right here at about 17,500, right? And if we get a move like that, I honestly think that that's going to shake out anybody that's still left over for the most part. Anybody that was waiting on the sidelines that really was just kind of unsure, waiting to panic sell, this is when they're going to do that. If we end up getting any sort of a move below the support, that's what's going to happen. But I don't think that that's the likelihood scenario as of yet. Right now, we still have to wait and see what happens with the market. If we jump in here on the shorter time frames, overall, even though the stock market has pulled back in here, Bitcoin really didn't have much of a move to the downside. And so we could still see this thing, you know, go a little lower. We could retest the range lows. And we could just go back and chop for, you know, a whole nother month and a half before any big move ends up happening. And so if this is what actually ends up playing out inside the market, you guys should really just be aware that this thing can get very choppy and a lot can happen inside of the price moving up and down without a clear move being made one or the other, right? Keep in mind that now that we have our resistance up here, we have our range lows down here. Don't be surprised if we came and we had to move back up and then came back down to retest these range lows. Whether we break below them or not, that's aside the point. Just don't be surprised if we ended up coming all the way back down to retest those range lows. Now, at the end of the day, what I'm watching for, a lot of it has to do with the total market cap, because I believe that the reason Bitcoin is holding up has a lot to do with the total market cap holding up. Now, with the total market cap, all we've really done is retested our previous resistance in here, right? This isn't anything more than a retest. And so obviously if we lose this level, then that's obviously going to look pretty bad. And it would pinpoint that we would retest the range lows again. But for the most part, everything on the total market cap looks a lot more solid. And when we're also looking at the total market cap, we still have this trend line, and we're pretty much just right at that same exact pivot point amongst both of these. We have a horizontal support, and we have a diagonal trending support as well, and they're both kind of converging at the exact same points. And so overall, I think that we could see some more consolidation here, whether we retested this. But if this is just nothing more than a retest, that could set us up for a much bigger breakout to the upside. But it's really hingent upon the total market cap holding this level. If this level becomes resistance, then I'm not holding a lot of support inside of us actually breaking out and making a higher high. I would expect us to come back down, retest the range lows at the bottom. And if that was the case, we could very easily see the market kind of do something like this, where we end up having one more low below this support. And I wouldn't expect it to be a big move below this, just a really choppy, slow bleed that would take place up until about November, December of our end of the year. Because that would be taking place exactly 365 days past our high, pretty much right in that exact same cycle time frames with what we would be watching for the completion of that 1 year downtrend. And so if we do get a lower low, I do expect that it would be a slow bleed, and it wouldn't be much of a lower low. But keep in mind, guys, that it's equally as possible that this is ending up to be some type of flip. If it's going to be a flip, it all is hinged upon the stock market holding support and actually flipping this level here. We're now right in contact with our buy range. This is kind of what I was watching for, updating you guys with, as the level that we need to hold. If the stock market is going to be breaking out and going higher, we need to hold above this level. And then that would set us up for a move upwards of 4,500 to even 46.5. That's where I would be watching for the stock market. But that's kind of our big decision point, because if this actually ends up becoming resistance, then that's not going to look good whatsoever. Then that's going to definitely pinpoint to lower lows coming, and we would definitely be going to probably about 3,200 in the SPX. Honestly, think that we would have another 5 impulse waves all the way back down into new lows, and it would be a very volatile time. Crypto, if that was the case, crypto would definitely be going to like 10K. Bitcoin would anyways. Overall, with the move that we've had to the upside, a lot of this was fears of Russia invading, and so there was a lot of enhanced selling going on. Personally, where I'm leaning towards the price heading is obviously that this is just a flip, and then we're going to be heading up for one more high. And there's really 2 scenarios that I see. Scenario 1 is this is just 5 impulse waves to the upside, and we're just missing our wave 5. Or scenario B, the bearish scenario, would be that this is a completed ABC correction back up, and what we would be watching for to the downside is pretty much just 5 impulse waves. Something like that, right? And so if that's the case, anything's possible. I'm personally leaning towards this being a retest, but I mean, if we start doing this scenario where this becomes resistance when we bounce off of this, then obviously the best scenario for everybody else watching would be to look for shorts, or be at least watching for buying as we start dropping into this next major sell-off. But overall, guys, I think that the bullish scenario is equally there. When I see this on the bigger picture, it looks more like a bigger picture ABC that we've already completed. And I believe a lot of this fear was basically enhanced because of Russia. And now the inflation has always been super bad throughout this entire period. That was really where we're going through a lot of inflation. Or I should say deflation, because the prices of stuff were going down, but inflation was still going up every single month. We were ticking up anywhere from 0.5% to over 1% inflation per month. And so that's a ridiculous amount. So now that we're kind of at this point where we've got the midterm elections approaching, we've made this nice move off the lows, I believe that this is most likely going to be a flip. And it's better to be looking for buy opportunities throughout this range than looking to short the market. Like I stated, though, if this starts to look like resistance, we get some rejection wicks up here, then you would probably be looking to short the market from that point on. Now, the final thing that we're going to be looking at today is going to be the US dollar index. Now, in our last video covering the US dollar, we talked about how we just retested the 50-day moving average and how we were literally right here consolidating in that red candle. And I said how it's looking pretty bullish so far. This looks like a bullish retest, and how if we do end up breaking out, then that's going to be setting us up for a move upwards of 111 right here. And so that's pretty much where we're heading right now. We've just retested the all-time high of our last move. Now that we're retesting our previous high, it's looking like we're going to be setting up for a much larger move to the upside. The US dollar is looking like a move to 111. But keep in mind, guys, that when we're looking at the big picture of the US dollar chart, or I should say the index, I think it's really important that we pay attention for this large picture, because overall this entire market is in a downtrend. Always has been. There's nothing right now that's pinpointing to the dollar just going to continue to have a lot of dominance moving into the future. We have China, we have Russia that's already building their own reserve currency. They're banding together with the Middle Eastern countries to actually get that going, and they are going to get that going. It's only a matter of time before the supremacy of the US dollar comes to a collapse, and I believe that we're actually about to see that reciprocated inside of the charts right now. Now, we've been in this downtrend. Every single move we've had to the upside ultimately resolves to more downside continuation. And when I'm looking at this from an Elliott wave perspective, we finished wave 1, we finished wave 3, wave 4 retested the high of wave 1, and this move to the upside that we're in right now is our completion of wave 5. We can see our subwaves down here. This was wave 1, this was wave 3, and in my opinion, we're working on the completion of wave 5 of 5 right now. And that's where we could see a top anywhere from 111, really all the way up to the range highs here at 120. It's kind of hard to say exactly what the market's going to look like. But what we can look at is Fibonacci to understand the fib relationships on where we should expect to see the top of our 5 wave. Where is our actual 5 wave target? And the way that we would draw this is we'd come up here to the high, back down to the low, and we can see that this 1618 is here at about 113 to 114. That's really where our first target is going to be. And the way that we get this target and what this target actually means is it basically just means that our wave 5 is the same size as our wave 3. And if you measured this wave 1 in here, wave 3 was pretty much the same size as our wave 1. So every one of these impulses has been the same size. And if this market comes up and retests as 113.5, then every one of these impulses would have been the same size, and it would have followed pretty much just textbook Elliott wave theory. Now, even though this wave 3 was technically bigger based off of the price, the percent return is the same when you're actually crunching the numbers, and so it makes the Fibonacci look the same. Overall, the price structure looks much bigger in this wave 3, and it does follow more standard Elliott wave theory rules. But we do have a little bit to go until we're at our true confirmed target for the 1618. But I mean, as a whole, guys, we finished wave 1, we finished wave 3. This looks like the completion of wave 5, as we've been in a major all-time downtrend since the beginning of this chart in the 70s. Basically, since the beginning of inflation when they took us off the gold standard. We're seeing that this is most likely going to continue to resolve in that same way. Lower highs, lower lows, lower highs, lower lows, all the way throughout here. And I expect that this is a trend that's going to continue to play out. Considering we've only printed more money, there's only more reasons to think that the market of the dollar is going to continue to go down. And so that's really why I believe that all of this is playing out. The dollar going down would basically mean that the stock market would keep going up, and we have a brand new all-time high cycle. The stock market breaking out would mean that this market would break out. It would mean that Bitcoin's market would break out. And that's really what we're watching for. But as a whole, guys, all of this is hinged upon so many different things. We really need to see the top in the dollar coming in here soon. But with us coming up on our 1618 target, I think that we're closer than ever before to seeing that. I can see the impulse waves in here. The subwaves look to be really close to being completed. And with all of our other markets stacking up to look like we could be at a point of reversal, especially with the midterm elections coming up, I think that there's a lot of opportunity inside the markets right now. So overall, volatility for the rest of the year, that's a given. Be aware, be careful, stay prepared. Just remember that as we're getting closer, focus on your long-term goals with your portfolio. If you're a long-term investor, don't worry so much about the short term. It's destined to change frequently, especially at the low points of a cycle. All we can do is focus on the long-term picture, because that's where, we have the most profitability inside of our portfolios, the most consistency as well. If you guys found value in this, leave a like, comment, and subscribe. Hit the notification bell so you don't miss out on any of these amazing videos. If you guys want to join the Discord server, download my free ebook. Links in the description for that. For the people that also like to sign up for my VIP, my course, my signals, follow all the trades that I take, all of that stuff, links are in the description for that. Thank you guys so much for tuning in. And with that being said, I'll catch you in the next one. As always, peace out.